Family, BlackRock confirming that they are taking over. BlackRock, with about 11 trillion under management, really rationalize this. 11 trillion under management. They are larger than most countries' GDP. Think about that. Everything you touch from the minute you wake up to the minute you go to bed, they probably own part of that company. So in today's video, we're going to listen to a video from BlackRock, Larry Fink. Then I'm going to break down my analysis of his investor letter. This is how I make my investments. Not off hype, not off price predictions, not off hopium, off of logic. After 2030, we are moving into a rental-based society. Homes are going to be unaffordable. The middle class is getting wiped out. Leverage towards technology moving down to the working poor. The 1% are going to become extremely wealthy. So there's many hints within his investment letter that share with us how we can position ourselves. That's what we did from 2020 to 2025, and we are strategically positioning ourselves from 2026 to 2030 to take advantage of the largest shift financially, economically, and through technology. So we're going to watch the video first, and then I'm going to break down my analysis of the letter, and then on every video on the back end, I share with you exactly what I'm doing to include my portfolio. Not financial advice, just being open and honest with you guys to keep you and myself accountable. I would love for you guys to come back to my videos, go back to 2020, watch my videos up to 2026, and then you can watch my videos from 2026 to 2030. But what we have done is we've gone from losing everything to multimillionaire investors and multimillionaire entrepreneurs. All we're doing is positioning ourselves on the right side of the interest quadrant. Someone's earning it and someone's paying it. In the market, somebody's winning, somebody's losing. It's not different this time, guys. There's a bull market everywhere. And the bear market is where you get wealthy. Okay, so let's listen to what he said. This was posted by Real World Asset Watch List. Says BlackRock is well prepared for the future of finance. So damn well we should be preparing, guys. You can fight the system, okay? You can try to figure out who Satoshi is. The system is changing. You can be a keyboard warrior all day. The system is changing. I promise you, it ain't going to wait for you. The freight train has left the building. You're going to go on, get on and go for the ride of your life, or you're going to get ran over by it. But everybody's going to be on the train. Check this out.
And we believe BlackRock is well positioned for what comes next at the intersection of the forces reshaping global finance. From the expansion of the capital markets to the evolution of AI and the digital transformation of investing. I just published my annual letter. I write this letter each year after hundreds of conversations with clients and leaders around the world. And lately, there's a common theme. People feel like the world is changing faster than they can process.
No shit.
Countries are investing more at home, and artificial intelligence is advancing at an extraordinary pace.
That's a key factor right there, guys.
And capital is moving differently.
Capital is moving differently. Another hint right there.
At the same time, enormous value is being created in the capital markets.
Okay, remember, 10% of the population owns almost all the equities. So that means the wealthy are going to get wealthier.
But not everyone feels connected to that growth.
There we go.
If more prosperity is being generated in markets, then more people need the opportunity to participate in them.
Sure.
That's what this letter is all about. Expanding long-term ownership through stronger retirement systems, earlier wealth building, and modernizing markets that make investing more accessible and more possible.
Okay, so I'll leave it right there. You can go watch the rest of the video. So I'm going to leave his beautiful face up right there so you can stare at him as I read and analyze the letter in my breakdown. But before we do go into that, I'll bring it back to this. But just in 2.2 trillion asset manager Invesco takes over Superstate's 900 million tokenized treasury fund, entering the rapidly growing 12 billion tokenized U.S. treasury market alongside BlackRock and Franklin Templeton. Okay, the hints are everywhere, guys. Okay, so let me do an analysis of his letter. So I got all my notes up here, so I'll be looking up here. And I want to break down for you this is how I make my financial decisions, is I'm looking to see what the analysis of his letter is and where we think the system is going. And I'll share with you how I position myself in the new infrastructure, the financial system on the back end of this video here, okay? Okay, so what is he really saying in the letter? I encourage you to go read the letter, okay? Very important. And do your own analysis. So this is my own personal analysis. So tokenization, okay? It's the next internet. This is huge, guys. This is massive. Think literally compares tokenization to the internet of 1996. Okay. His thesis is every asset, stocks, bonds, real estate funds will move on chain. Hint number one. Key idea is half the world already has digital wallets. Okay. Soon those wallets will equal investment accounts. So everybody around the world, as Trump said 9 years ago, will be on an even playing field monetarily. Everybody will have access to the capital markets. So here's my translation of that. The infrastructure for mass crypto adoption already exists. You are so early, guys, but it's moving fast. Okay. Number two is finance is moving from Wall Street to Wallet Street. That's my little saying. From Wall Street to Wallet Street. Okay. People in suits to your damn phone. You can invest right here on your phone. My son has a 3D printer. He prints toys in his room. Things have changed, guys. So I deal with a lot of clients from 35 to 75 years old, a lot of baby boomers with a lot of wealth, and I help them understand infrastructure with Capital DR. And a lot of them are still struggling with, damn, the change. I'm like, you have to adapt. You have to adapt your brain to the change. So investing will become as easily as sending a text or a payment. Hint, tokenized assets, instant settlements, and there'll be no middleman. It's going to move really fast. Okay, here's my translation of this, what he said in the letter. The biggest shift isn't crypto coins. Okay, get out of the hype. It's everything becoming crypto rails. That's my hint to you. Institutions are already all in, guys. BlackRock, 150 billion in digital assets, 65 billion in stablecoin exposure. They launched the Build Fund, which if you guys watch my video, I'll attach it somewhere around here, as I break down how BlackRock is deeply integrated into Coinbase through stablecoins, through the Build Fund, and tokenized assets. Okay. Here's my translation. This isn't coming. It's already happening behind the scenes. I've been trying to tell you guys that from 2020. It's already happening behind the scenes. The freight train has left the building. Chill, relax. Okay. When it's red like this is your opportunity. Get out of the noise, get out of the hype, put a 5-year, 3-year time frame on. Okay. AI plus capital markets equals wealth divide. Okay. So Larry Fink warns in the letter, AI will create massive wealth. It's going to create massive wealth for the people positioned correctly, but only for those who own the actual assets. So here's my translation. If you're not invested, you're getting left behind. It's that simple. Okay. You're in a dollar that's deflating every single year. You lost 11% purchasing power. Okay. Inflation is stealing your purchasing power. You're buried in debt. Housing is going to become unaffordable. AI technology is going to take over jobs. Okay. And the wealthy are going to get extremely wealthy. So you have to move your cash into cash flow, take the cash flow outside of debts and non-negotiables and income and put it into assets that beat inflation that are part of the new monetary system. Okay. So retail needs access. Tokenization solves that, guys. So here's the problem that he stated is that private markets equal locked out for the average person. So the average person is locked out of private markets right now. The solution is tokenization opens up to private equity, real estate, bonds, and global assets. So here's the thing. I told you guys after February 20th, 2026, okay, we moved into decentralization. You don't need to go to a dude in a suit anymore, driving his 911 Porsche as your financial advisor. So financial advisors, you need to wake up. You need to start studying this stuff. Okay. The younger generation, we are innovating our financial company. Younger generation isn't going to need you anymore. You need to innovate to the younger generation, meet them where they're at. Very, very stark warning to anybody in the financial space and traditional. You need to start thinking outside the box on how you can meet your customers where they're at. Okay. Here's my translation of that. They're building the system so retail can participate, but also so institutions can scale globally. Okay. What you think is decentralization, they're going to build the infrastructure that you're going to ride on. You thought you were running to decentralization and they caught you on the net on this side. First they resist it, then they sue it, then they regulate it, then they join it. Draper, you're in regulation and joining phase. You weren't running from anything, guys. Who do we give our taxes to? Who's on the coin? Caesar. Give your taxes to Caesar. Give to God what is his. Give to me. It's the same thing every time, guys. It ain't different this time. You want to believe it is. It's not different this time. So what does this mean for cryptocurrency? Okay. So remember, this is my analysis of his letter. You should go read the letter and do your own analysis. Okay. This is a big, big shift, guys. This is where most people misunderstand this. Okay. Old crypto narrative is decentralization, anti-bank, replace the system. That's gone. And how I rationalize that, I'm a logical person. Bitcoin Conference 2023, decentralization, anti-bank, replace the system. 2024, I was there watching this happen. Politicians are walking around and everybody's cheering for them, taking their pictures with them. You got played. Okay. The new institutional narrative, Think's vision, is crypto, infrastructural layer, blockchain, financial plumbing, tokenization delivers the system. So you have to decide what's going to be the infrastructural layer cryptos, what's going to be the blockchain and the financial plumbing, and what tokenization will be the delivery system. That's how you should make your decisions. And if you can't say unequivocally that these assets you're investing will be part of that, the answer is no. Okay? Because you're not running from the banking system. They caught you on this side, guys. The largest institutions already are building the rails. They just need clarity, the Clarity Act. Do you see where I'm going with this? Okay, 3 buckets of crypto going forward. Store of value, digital gold, Bitcoin. It's going to be an institutional hedge already accepted by BlackRock. It's not a bad asset anymore. It's not. BlackRock is the largest holder in Bitcoin through IBIT. Grayscale. You go to Fidelity, you can move some of your 401k into Bitcoin, Solana, Litecoin, Ethereum, right there on your Fidelity, guys. Okay? We're moving out from the hype, the hope, the bullshit, it's the new system, guys. It's the new system. Okay. So financial infrastructure, this is the winner. Okay. So we have the digital gold, which is Bitcoin. This is my opinion. It is based on my portfolio, my bias. XRP is going to be a big part of the payment liquidity. I'm going to put Ethereum on here. I don't hold Ethereum in its own personal decision because I was in a documentary that exposed Ethereum with the battle with the SEC and Ripple and all that stuff. So I didn't feel it was ethical and moral for me to hold it. I think I made a big mistake by selling all my Ethereum. I sold it for Solana, so I can put Solana in position there. But I think it's a great investment if you want to make some money in the future. Ethereum smart contracts and tokenization platforms, okay? The role is moving trillions of dollars officially. So we have the store of value Bitcoin is role is wealth preservation. That's what I'm using it for. Okay. XRP, I'm using that as the understanding that the rails are changing and to move trillions of dollars effectively through the system. Okay, here's the end game, guys. Is tokenized stocks, tokenized real estate, tokenized treasuries already happening. Everything becomes investable, fractional, and liquid. And why does that have to happen? It's because everything's going to become, listen to me, unaffordable. Owning a home is going to be a rich man and a rich woman's sport. You are in a critical moment right now. I mean, it is so serious over the next 3 years. I've been trying to shout from the mountaintops, and that's why these titles say, holy shit, get your shit together. It is that important right now. I told you in 2020, 2021, 2022, 2023, 2024, 2025, as you guys ran, we built empires. And you're in this critical moment right now where you're still sitting on your hands. I'm not saying you should invest in crypto. What I'm saying is you should be studying the infrastructural change. So here's my exact portfolio, not financial advice, just being brutally transparent with you. Okay. First of all, I focus on I invented what's called Capel DR, and I have a huge project coming out. I'm going to need your help with it. I have a very, very powerful thing. I have something I've been working on. A hint, it's been just edited, ready to rock and roll. It's going to be coming out to the world to help you explain what happened, how it happened, and how to fix it. What did our grandparents go through? We cannot operate on the same rules. The 60-40 is dead, guys. It's absolutely dead. I invented what's called Capel DR. C is cash flow. Cash is trash. You need cash flow. Cash flow is king, not cash. Okay. So what I do is outside of debts and non-negotiables, okay, that's bills, things to survive. Income, 10% of it, which income you have to trade time for, I move it into 10% dividend stock. So now I'm taking my income, 10% of it, and getting a pay raise. That creates more cash flow. Okay, so now I have income outside of debts and non-negotiables, cash flow. I move it into A, assets that beat inflation. My assets are based on my understanding of where the economic system rails are going. These are my top assets. Number one is XRP, 43% of my portfolio, being brutally transparent. Bitcoin is 40%. WLFI, World Liberty Financial, is 4%. Solana is 3.7%. And then it drops off pretty significantly with HBAR, VeChain, and XLM. That's it. That's all I hold. I sold almost all of my cryptos and I consolidated into my top 4. I'm only buying going forward XRP, Bitcoin, WLFI, and Solana. I'm following what the billionaires are doing and the multi-millionaires are doing. They're consolidating into the top cryptos because regulation is coming. I know your favorite influencer wants to sell you the next, Trump's going to make you rich with this token, the next meme coin, the next best thing. Trust me, you're going to get wrecked. Okay. Keep it simple. Okay. Stop trying to catch these 1,000Xs. Think about it. Bitcoin grows about 50% every year. Where can you grow your asset 50% every year? That's my assets in the stock or in the crypto side. Stocks. American Bitcoin's number 1, XXI is number 2. All my other stocks are dividend stocks. I have tier 1, high risk, high return. I have tier 2. An example of one is STRC. I got money in there. I'm generating about 9 to 11%. Variable, which is more operating like a bond. So that's my cash flow. My businesses generate cash flow. I have my A, assets, and then I have P, which is protection. I have cash value life insurance. Permanent life insurance protects my principal. So when you come collapsing down, I've insured my profits. And then I use it as a family bank, which is leverage. And when it's red, I leverage richest man in Babylon and I buy people's fear. Okay. I have precious metals. I have Berkshire. And then L is leverage. I just explained that to you. I only leverage on the business side that makes income or tax liabilities or that makes me money. That's it. I have zero personal debt. That's what you want to get to because there's only an interest symbol. You're earning it, you're paying it. That's it. That's it. There's no real money in the system. You're earning it or you're paying it. And Larry Fink said it. Guys, the rich are going to get way wealthier. Okay. I'm sorry, but owning a home now is not even a good investment anymore. A primary residence sucks. I actually rent my primary residence and I rent where I own. It's totally backwards now. I used to make fun of and get not make fun of, but I used to push back on. I used to make fun of what's his name, Grant Cardone. I was like, what is he talking about? Rent where you own. I just did it. It's phenomenal. I'm renting a house. I have Augusta going on. I have basically no mortgage. The rules have completely. It makes so much sense for me to rent the home that I live in, and the homes that I own, I'm renting out, and my net worth went through the roof. I wish I could say that, like buying a primary residence now is not the greatest investment anymore. You can't even beat inflation, guys. And I'm not telling you not to have a primary residence, not to have a home. That's not what I'm saying, because I will eventually buy my primary residence. Right now, I'm in asset mode. I'm trying to trying to take advantage of this asset opportunity. Here's the example of it. Let me give you an example. The neighborhood that I moved into, it's a very secure neighborhood I've been wanting to move into for a long time. The house that I bought would have required close to $300,000 down. Okay. The mortgage would have been close to $13,000 to $14,000. So think about this. Let's use some math. So if I would have put $300,000 and had about a $13,000 mortgage every single month going towards that house, every time the AC breaks, there's 3 ACs on it, big ass pool, right? I have to pay for that. Or would I have been better off to put $300,000 into the capital market and pay a rent of $6,500? What do you think is going to make me wealthier? $300,000 down, $13,000 a month towards a house that's not even going to grow because of the housing prices, or put $300,000 into the capital markets and save almost $6,000 a month and put that into the capital markets over the next 3 years? Which one do you think is going to make me wealthier? That's how you have to start thinking, and that's what I did. Okay. I completely flipped. It took me a long time to flip my brain. Those are the type of moves we're making. On top of that, we have a trust. I have a Wyoming LLC, owns my digital assets, my legacy digital assets. It's an institutional grade custody. My real estate properties are inside my Wyoming LLC, and I'm just a W-2 employee on this side with an S Corp. Protection, protection, protection. So I'll get off my soapbox. I love you guys. I appreciate you.